Good morning, everybody. This is Live Trading Talk with Patrick MontesDeOca. Let's jump right into the fire as we are getting red signals across the board. Meta, it used to be old Facebook, is down about 25%. And so what we have here is massive liquidation, particularly on tech stocks. Down over 25% on tech stocks, on Facebook, on Meta platforms. I want to, for just a few minutes here, digest this volatility that we have, which I believe is massive liquidation that's going on in tech stocks, and obviously it's affecting across the board, and it's affecting even the commodity markets. It's affecting gold and silver. It's affecting pretty much everything across the board. Massive liquidation on tech stocks. Amazon down 6.4%. Facebook down 25%. The biggest losers. Gold is down $18. Silver down 64 cents. Fast markets to the downside. Let's start trading here and see if we can identify any opportunities here for us to get into a day trade. Once this bloodbath settles down a little bit, I want to take a look at where we are in relation to the data that we use, called the VCPMI, which stands for the Variable Changing Price Momentum Indicator. As you can see here, in taking a look at silver in particular, we've come down to these levels here, making a low of 2202. We're making a low as we speak. And if you noticed where we are in terms of price, we are at a major blue level. Now, the lines on the right here represent the daily signals, and you see the market below B2 level, which indicates that it is extremely oversold. If you look at the weekly and daily numbers, you're looking at an area that is in blue all the way down to 2164, which identifies what it's called the accumulation of inventory, the accumulation of supply. From a mathematical probability, this is where you can begin to see support using conventional technical language. We are oversold into a major area of support. these are pivot points, and the market obviously is way down below this pivot point. So how do we identify a trigger point? Well, first of all, the price is into the zone. So if you are a day trader and you're coming in, you have no position, you want to be looking for the price to cross any of these pivot points. Then that means either coming down to 2164 or getting back up above 2226. A close above 2226 activates a trigger point using the 15-minute bar. So there are no signals right now. We are waiting for the market to do whatever it's going to do in this volatility, and for whatever reason, the price is down where it is. Fundamentally. But applying the VCPMI as a GPS to show you where the signals are activated, I'm waiting on silver for a close above 2226 or 2164. Now, this is for day traders applying the futures contract. What this tells you is the algorithm identifies this area potentially where you're going to see buyers come into the market. The lower it goes into now the weekly, the higher probability. Because it's almost like you could see the price dragging the daily signals into a major weekly signal, which is 2164, if activated. Depending upon the supply and demand at these levels here, the price either going to come down or it's going to go up above 2226. And this is the area where I'm looking to enter into a trigger point. In the meantime, we are neutral on silver. Let's take a look at the gold market. The gold market is pretty much in the same situation. Alert. We are in an alert mode here for the gold market either to come down to 1787, which is the daily number, or this signal by reverting above 1810, which was the weekly average, it was the daily average. It activated a bearish price momentum. The initial target was completed. So let's see if the price either comes down to the second target of 1787 or it reverts above from here. So it's in a neutral zone, and I want to take a look at just where the market is, even for Bitcoin, and then we can take a look at some of the news that came out today that could be affecting as well the market volatility. For Bitcoin, we are trading below the weekly average of 36,510. We are in a choppy area. The average price is a 50-50 standard deviation, and we're trading on the weekly average price below the daily average price. And we got out to 39 here, 38,754. The high here on this move was 38,765. This is just yesterday, and reverted, activating a bearish price momentum, and it's chopping around the weekly average and below the daily. And so my trigger point is basically waiting for the market to either come down to the buy one level daily or activate a bullish price momentum by trading above 36,517, and then we're looking at the weekly targets above 40,163. So we seem to be in a neutral zone with all this liquidation going on in the equity markets, which I believe is affecting the commodity markets as well, as it always does. And sometimes this can provide some incredible bargains. Let's come back to the gold market here. We're beginning to see some green bars, which is confirmation of that demand of the supply that's down here is beginning to be indicated by a green. For those hedgers in my trading room, continue to be hedged with dust and hold on to this, as the 7th is the next cycle date. And let's see what the price does here for the next day or so. And we can see whether we're coming in here as a bottom. Potentially, this cycle date expected may be coming in if the price continues to go down as a bottom. So it's fitting into the mold of the cyclical pattern that could be the platform for the rally that we're looking for after this swing down correction towards that 1880 and 1900. So we're looking at the market microscopically short term, looking for day trading opportunities, but we are continuing to add to our position in our core long position in precious metals here: gold and silver and Bitcoin. The headlines that we have here this morning are basically related to inflation. The Eurozone inflation hits new record, piling pressure on the European central banks. Eurozone inflation rises to fresh records against expectations. A jump in euro inflation adds pressure on the ECB to act. Eurozone inflation hits record high of 5.1%. So we're getting a lot of talk about the cost of living for the 16 nations that the Eurozone currency rose to 5.1% in January, despite expectations for a sharp drop to 4.4%. December figure had come in at about 5%. The euro jumped to session highs versus the dollar, trading at 113 by 11 a.m. Obviously, this is going to create some hawkish talk from Lagarde regarding inflation. And so the markets are obviously being affected by this volatility, and it's throwing and forcing a lot of people, particularly with tech stocks, to liquidate their position as a result of margin calls. And this is bringing down, obviously, where the gold is down, it was sharply lower, but I'm using this to identify, once again, here it is, gold up above 1800. This is what exactly I'm talking about here, that the VCPMI identifies the market when it triggers. We have a buy in gold. We have a buy in gold. Buy the gold at the market. Buy the gold at the market. If you have dust, I would look to take profits on dust. Take your profits on dust if you hedged. Cover your dust position. The market activated a buy trigger and the silver market close about 22.26 will activate the buy trigger. We are beginning to see the kind of reversion that the VCPMI looks for, and that is, as I was saying earlier, when we were making new lows in silver, that this area should revert, it should attract buyers, and that's exactly what it's doing. Regardless of what the fundamentals are saying, regardless of the news, it's telling you to cover your shorts into this area and start to get net long, or look for buy triggers if you're day trading. The gold market has activated already a buy trigger And if you got long here, you can use three choices of a stop. The most conservative one is a close below 1797. The second one is a dollar maximum risk that you can carry on your position, or hold on to the market until the close, or it tests the buy to level depending upon your level of risk that you want to tolerate. The market came down a little bit, and so we're buying gold 1798.99. And we want to hold on to this with your maximum dollar stop. And look for the initial targets basically to be about 1805, where you can begin to unload. And the weekly target is 1810. You should be out of your dust. At about 2045. I believe that what happened here in the stock market, in NASDAQ, is an incredible fire sale. It gave us the opportunity for those that want to get back into Facebook, that want to get back into NVIDIA, that want to get back into tech stocks. This is where you go in and you add to your position, because what we're getting with regards to inflation, with regards to this hawkish talk, is short term. And it feels like the capitulation, you might say, or the peak of the inflationary fears that we have. You have to put into basically the equation the fact that the world debt is running at 130+% of world GDP. And raising interest rates is only going to exacerbate, you might say, make the debt worse. Where on one hand, they're raising interest rates, on the other hand, they're borrowing more because they got to monetize that debt. It's not going away simply because they're raising interest rates. The only reason why they are raising interest rates is because the currencies are imploding as a consequence of this monetary system. And it's bringing in the possibility that we are pushing the system into another major crisis. If interest rates shoot up rapidly, it's going to cause massive distortions on the yield curve. Massive defaults in the financial markets will be a consequence. So it's a real difficult place to be if you are a central banker. And I think The only thing that you can do is talk hawkish. Create fear in the market, which is what they're doing right now. My comment for today, my friends, is do not let this fear prevent you from looking at the reality of what's happening, and that is that interest rates, if they do go up sharply, you see what happens just on the talk, on the hawkish talk of raising interest rates. So look at it as a fire sale opportunity and look to trade from the long side. I expect that if they do raise interest rates, they're going to have to lower it immediately or create more stimulus, as they call it, which is really nipping and chipping away at the purchasing power and intrinsic value of its currency, whether it's in the United States or in the Eurozone. We will continue to update our live trading room throughout the day. And in the meantime, my friends, have a great trading day here, and I will talk to you later on this afternoon at 2 p.m. Pacific Standard Time. Have a great trading day.